Welcome to this explainer. Today, we are going to completely flip the script on how you think about buying property and building wealth. You know, that traditional home buying narrative we've all had drilled into our heads, it's actually completely backwards. And honestly, if you aren't careful, just following the crowd could literally cost you your long-term financial freedom. So we're going to break down exactly why you need to rethink your real estate team step by step. Let's get right into it.
So who really controls your financial future when you buy a home? Think about it. When we kick off the home buying process, what's the very first thing we do? We call a real estate agent. We drive around with them. We check out those gorgeous kitchens, ooh and ah over the backyard space. And naturally, we end up asking them, hey, is this a good investment? We just kind of assume the person showing us the house holds the keys to our financial destiny. But is that actually true? Are they really the ones structuring the next 30 years of your financial life?
Well, there's this saying in the industry, and it goes like this. Agents sell houses, lenders sell financial outcomes. Man, this statement is a real game changer because it completely shatters the biggest myth in real estate. I mean, think about it. Asking a house seller for long-term money advice, it's kind of like asking a car salesman for retirement planning. Now, it's not that real estate agents don't mean well. They absolutely do. It's just that their professional expertise, their training, their entire incentive structure, it's all laser-focused on the transaction of the physical asset. They aren't zooming out to look at the trajectory of your overall net worth over the next 3 decades.
Section 1. The Real Estate Advice Myth.
Here's the deal. Agents are fantastic, like truly fantastic at finding the right physical property. They know the local school districts inside and out. They know exactly which neighborhoods are up and coming, and they absolutely know how to negotiate a seller down on the asking price. But they simply aren't equipped to build your financial foundation. If you're relying on your agent to tell you what you can comfortably afford or how a specific mortgage structure is going to impact your retirement goals down the line, well, you're setting yourself up for some major financial anxiety. We really have to draw a hard line here and stop relying on agents for our long-term financial strategy.
Section 2. Houses versus financial outcomes.
It all really comes down to this clear split. Real estate agents focus on selling houses. That means their whole world is aesthetics, location, curb appeal, and purchase contracts. Mortgage lenders, on the flip side, focus on selling financial outcomes. Their domain is compound interest, amortization schedules, market liquidity, and ultimately, your financial survival. See, one profession focuses purely on the physical property you're living in today, while the other is totally dedicated to your long-term prosperity and wealth accumulation tomorrow. Now, make no mistake, you absolutely need both professionals, but you've got to understand who does what and, more importantly, who you should be listening to when it comes to your money.
Section 3. Mastering debt-to-income ratios.
An agent might just casually say, hey, great news, you're approved for an $800,000 house. But your mortgage banker? They're the one who actually sits down and does the hard math on your debt-to-income ratio. They are going to be the ones to warn you if taking on that $800,000 loan is going to absolutely skyrocket your DTI, leaving you without nearly enough cash flow for, groceries, vacations, or those unexpected emergencies. The banker is the one pulling back the curtain and looking at the real math.
In the financial world, keeping your total debt obligations, and we're talking that shiny new mortgage, your car loans, student debt, the whole shebang, keeping all of that below roughly 43% of your income is basically the golden rule of financial health. Your banker's constantly evaluating this exact balance. Why? To make sure your new home doesn't turn into this massive financial burden that just strains your daily life. They're the ones in your corner protecting you from becoming house poor.
Section 4. Growing long-term equity.
But here's the thing. Mortgage bankers don't just play defense by protecting you from bad debt. They also play offense by proactively planning for your long-term equity. And look, equity isn't just some boring industry jargon. It is literally the primary engine for your personal wealth. I mean, the vast majority of millionaire wealth in the world is tied up in real estate equity. But maximizing it, that requires a banker's expertise. You need them for choosing the exact right loan product, structuring your down payment efficiently, and really understanding how interest rates are going to affect your principal paydown over time. A truly great mortgage lender doesn't just jam you into a 30-year loan, hand over the keys, and totally forget about you. No way. They strategically structure your mortgage to make sure your equity is growing as efficiently as possible over time. That might mean proactively advising you on exactly when it makes mathematical sense to refinance, or showing you how just making one extra principal payment a year can dramatically accelerate your wealth accumulation. Through that continuous guidance, they take a simple house and transform it into a powerful working financial asset that builds real generational wealth.
Section 5. Your true financial advisor.
So, all of this leaves us with a much smarter order of operations, really a true blueprint for financial safety.
Step 1 happens way before you ever step foot inside an open house or start endlessly scrolling on a property app. Step 1, talk to a mortgage banker. Step 2, establish your debt-to-income and equity goals. You really need to sit down and figure out your true, comfortable budget and your wealth trajectory. And finally, Step 3, call a real estate agent. Do you see the shift here? Only once that financial blueprint is completely set in stone do you go out and find the physical bricks to match it. Secure the financial outcome first, and only then find the house.
As we wrap up this explainer, I really want you to ask yourself, are you shopping for a house or are you shopping for a financial future? If you're just shopping for a house, frankly, any friendly agent will do the trick. But if you are shopping for a financial future, well, you need to secure your wealth first with a mortgage banker acting as your financial architect, and the right physical bricks will follow. Thanks so much for joining me for this explainer, and I'll catch you next time.